Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on the euro currency. So, as we said yesterday, we're standing in a really thrilling moment. It's not just because of the coming to elections, but this is the period where we get a lot of statistics that could make really serious impact on the performance, at least in the short term, because it really makes impact on the sentiment of the investors concerning the Fed policy. And you can see that even minor changes in real data to expectations, I'm speaking about the personal consumption expenditures yesterday, just 1 decimal point difference. Higher than expected, some revision was to the upside only for the 1 decimal point. And you can see what has happened. And actually, mostly it has made an impact on the gold market. There was also actually some other reason. But you could see as so different reactions on the different markets. On euro currency, it was short-term reaction, not very strong, which actually completes our entry opportunity. The part of our trading plan relates to entry on the long side of the market. But in the gold, you can see it has triggered finally the bearish performance that we discussed yesterday. So we said we need to wait and see, because on the gold market was possible the upward continuation, were some signs of the bullish dynamic pressure. But close to the end of the session, gold finally has shown the bearish reversal swing and triggers some short-term retracement. On the Great British Pound, you could see absolutely different action. So if in euro currency it was minor reaction, on the cable you can see serious collapse to the downside. So it's also some particular United Kingdom news stands around it. So it's really the challenge right now to deal with the market. It's not really simple. And as we said yesterday, from the conservative point of view, maybe it's even not a bad idea to just sit in the hands for a few sessions until the middle of the next week, when this will be a Fed meeting on the 7th of November, and just see what will happen on the markets. It doesn't mean that you do not need to participate. Maybe we will get really very great opportunity, but at least to not risk too much. So on euro currency, you can see that after the thrust we have the upward action, but it's relatively slow. So we do not see fast acceleration. So here, in fact, we already do not have the bread and butter trade, at least in the Napoli terms, because we have already 4 closes above the 3x3, but market hasn't reached the 30% level. So it means that if market will keep going higher and reach this level, we will get kind of the look-alike pattern. Or this is also might be the prediction or some preliminary signs of the possible double repo, or at least that market should trying to challenge the previous lows again. What I also do not like here from the bullish point of view is that we have uncompleted major weekly target. It's around 107. The same story stands on dollar index. Here we have 105, uncompleted weekly target. Well, maybe it doesn't make an impact directly on the short-term intraday performance, but in the perspective of 1-2 weeks, that might make sense. So, and here also, if market will turn down, it could mean that theoretically it could keep going lower to complete the COP. These risks exist. So on the 4 time frame chart, you could see that everything actually has happened just perfect for this retracement down. On the hourly chart, if you take a look, market has tested precisely the level that we have specified. Once again, we said you could try to split the position. So this area, 108.46, 108.30, that's 2 levels that we have discussed to consider. Logic was simple. If you remember, we said that major retracement should not happen because it already was here. Reaction on the OP, here is probably will be a retracement smaller. You can see that market jumps. So after the reaction on the personal consumption expenditures, you can see upward continuation. Now, since the XOP on the 4 time frame chart stands 108.94, theoretically here might be the upside continuation in the shape of the butterfly. But this pattern, it makes sense to consider only if you already have the position. If you do not have it, currently the taking a new long position will be kind of gambling and trying to make a bet on a payrolls report, because from the risk-reward ratio, it is not really best place. You will have to hide your stop somewhere below this area, but your target is limited with this area or 1 rate 13 in the better case if we're coming directly to the 30% resistance on the daily chart. As you can see, it's not very impressive risk-reward ratio. Besides, ADP report, as you know, was relatively, or even not relatively, it was just superb, because it was expected to round 170,000. It was released to 230. So really almost twice difference in ADP numbers. And as you understand, that this significantly turns the chances in favor of the good payrolls report. Correspondingly, now take the 2 plus 2. So we have the slightly stronger inflation recently, and if we get additionally much stronger payrolls, or at least moderately stronger payrolls, that really could support the dollar. And from that standpoint of view, it also not really good idea to try and take position here. For those who take a position right there, theoretically you could just move stops to the break even and relax and watch for volatility, because volatility probably will be significant, and it might be some occasional spikes here that could lead you to close the position on some better levels. If not, well, in this case you probably will out on the break even. So that and towards what we have on euro currency. Let's keep watching, and once the Friday will be over and all this mess around this target, around for our XOP around 109.13 area, next step that we will consider, this will be probably next week, is what will happen on a daily. So particular with the COP and what will happen with this shape, whether we'll get double repo or what would be next direction. And that's in towards what we have in mind right now on euro.